The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, on a pleasant surprise, grains and oilseeds got a little bit of green on the screen as we closed out Thursday's session after we started lower. Livestock trade was relatively mixed. Overall, it felt like a fairly quiet day, but with the way the markets have kind of been trending this week, maybe we got a little oversold. We're going to talk about all that and more. Joining us now for market analysis, Brian Doherty with Total Farm Marketing. Brian, good to talk with you again, and hope you're having a great week so far. Thanks for joining us.
Jesse, thank you. Yes, having a great week and looking at fall weather here in Wisconsin's kind of returned to what I would call more normal temperatures, not this well above normal. Nice cool day, sunny day, farm work rapidly moving right along, not only Wisconsin, but generally the entire Midwest. So that's been a bit of the pressure on prices over the last 10, 15 days as well, as just rapid harvest pressure and some elevators getting plugged up, can't take any more. Corn drying down really fast, so everybody's trying to get at it while they can. In fact, in some areas, we're hearing multiple reports of corn drying down too fast and actually losing some weight with moisture content down to 11, 12% level.
Yeah, I've heard some of those same stories as well. And you mentioned just the supplies kind of plugging things up here and really being a bearish weight on these markets. And soybeans in particular, those charts have been fairly concerning to me. We've been talking about it all week here on the program, but then getting a little bit of a bounce on Thursday. Really across the board. Is it more of a dead cat bounce, do you think, or are we maybe setting some lows here and kind of trying to work off some oversold conditions? What do you think, Brian?
I think all of us that keep a tight eye in the market, when we have a day like today, we're kind of wondering, okay, what's different? What's new? Weakness this morning, it seemed to be accelerating the downtrend, and then all of a sudden you get a turn. So beans at the end of the session up 8 3/4 in November, 988 3/4. Kind of keep in mind where we are. We're well past the halfway mark with soybean harvest, and corn is going to be well past the halfway mark at the end of the week. I think it was 47% as of Sunday nationally. So things are moving right along. So this idea of the overrun kind of flooding the marketplace, there is truth to it. When you're in a heart of harvest, guys that don't intend to store, don't want a commercial store, they're going to spot price corn or beans. But that's going to be behind the market fairly soon. The market already knows that. I think that's why the market was down like it was the last couple of weeks, just anticipating good, fast harvest pressure. Your 6 to 10 day forecasts have indicated that. But to your question or your statement, this reversal, it's a hook reversal, could be the sign of something. Unfortunately, I don't have anything else to really back it today, other than it seemed the market more or less ran out of selling interest and buyers are starting to take a stab at it. Maybe there is some export business in the works. It is of good value, and it's likely that farmer selling will slow and end user buying will start to pick up a little bit more in earnest now that prices have given end users a second opportunity. But I don't know if I can pinpoint to any one thing here or go on a limb and say, boy, Jesse, this is a signal we've been waiting for. The low is in. I'm not going to go that far out yet.
I find it interesting too that you mentioned export business. We saw soybeans, wheat have some good moderate strength on Thursday. At the core market, I'd say it was relatively flat, even though the last 2 days we've had over 88 million bushels of corn sales to Mexico and unknown destinations. So explain that one for me. That one's a little curious, Brian.
Yeah, it's really hard to tell on any given day, or for me to say to somebody, well, when you see this news, this is what's going to happen. The market's going to react, right?
Yeah.
So you have a lot of dynamics in the marketplace. I think those are a little bit more, if I step back a step or two, a little bit more macro type things, and you go, that's impressive. The market's starting to respond. And then I will read that, get in my next phone call and talk to a farmer that his yield is running close to 300 bushels. So, so you've got this immediate sort of funnel of corn getting in the funnel, trying to get somewhere, and that's getting a little bit plugged up. Yet we're seeing some response to lower prices, and we're seeing response to, we got quality corn here in the U.S. Obviously, again, and I'll go back to, it's the macro picture is the demand is changing form to where you got to have it at all costs. We need to buy it. You chase the market too well. Let's just buy what we need this week. Obviously, chasing the market the last, not the last 2 weeks, but the previous 2 weeks turned out to be a mistake, right? If you're a buyer, so it's just a matter of being patient. I think there's low urgency on the end of end users to really get there, but we're seeing it happen on price and value, and that's a good sign longer term.
Something that I've been starting to pay a little more attention to this week, and I'm curious your thoughts here. If I look at the Nove 25 bean Dees 25 corn spread, we're starting to get to the end of the year and the end of harvest. Guys are making decisions for next year. Is that spread telling us anything where maybe we're buying some corn acres, or the market's trying to buy some corn acres into next year, Brian?
Yeah, it's at two. So I look at the ratio. So I take that price of December corn futures divided by November. So we can talk about the spread, or I look at the ratio. The ratio right now is 2.36. Typically, if it's around 2.4, 2.45, I'm thinking you're buying bean acres. So to your point, it's starting to move a little bit more in favor of the corn. But as I talk to producers, I got to tell you, though, they look at today 437 and a half December corn, and I am not seeing them flip cartwheels. Okay, so they're looking at that going, that's not good enough. So I don't think the pure price of corn itself, regardless of the ratio, is buying any acres at this point. We may look back a year from now and go, well, 437 was pretty good because we're at 380 or 315. But you're talking two major growing seasons ahead of that contract, the southern hemisphere and northern hemisphere. And keep in mind that central Brazil, the real key to the safrinha corn crop, is probably 7 to 14 days behind schedule because of dry conditions for bean planting. So I would say that the safrinha corn crop, in theory, is off to less than an ideal start. And that's the big exportable corn crop. So I think there is where you're going to see a lot more attention to pay down the road for weather when it really affects that crop. And that'll be mid winter to spring, when you're kind of the heart of the planting, growing, and then maturing season.
It's something to definitely look at and think about. But to your points, I think farmers at this time frame, wrapping up harvest, probably managing their risk more so on this current 24 crop that they're putting in the bin or taking to town right now, versus looking ahead too much at the 25 crop, Brian.
Right. So what I would suggest is that, as a farmer, don't get too far over your skis just yet looking at the 25, but we'll look at levels that, when you look at the current projected carryout for soybeans and corn, can we expect a lot more on top of the current price level? So, for example, I'm looking today at November of 25, trading around 1031. 1050 probably starts to raise some eyebrows. December corn, 450, raises some eyebrows. We're not quite there in December corn. We were knocking on the door of it here recently. And I think that starts the story of, where farmers may send direction, but I don't know if there's a real clear advantage right now. Uh, there's so much, and this is hard to kind of relate to, because of where things are today, but there's so much riding on the southern hemisphere crop and dependency on the southern hemisphere crop. They've already got more acres forecasted, more yield forecasted, more supply forecasted. The market is well aware of that. So weather becomes more and more critical to that part of the world. And if you look at all these drought monitor maps and weather disruptions, the story isn't told yet. The crop's not in the bin in that part of the world. So there'll be some fireworks if anything less than ideal conditions persist. And I think the corn crop for safrinha, and maybe the beans, you could argue, in Brazil, are less than ideal at this point.
Brian Doherty with Total Farm Marketing is our guest analyst here today. Brian, looking at the outside markets, energies, crude oil in particular, something you and I have talked about now for the last several weeks, just all the uncertainty in the world and crude oil, case in point, just been super volatile here this week. And I know that's had some influence in these broader ag markets, soybean oil in particular. We had some NOPA numbers out this week, but I mean, crude oil back down around $70 a barrel, just playing off the volatility in the Middle East, et cetera, et cetera. It feels like this week, Brian.
Well, it is, and it's a very explosive environment from a perspective of world peace and peace in the Middle East and or war. And this week, crude oil prices went on the defensive when Benjamin Netanyahu said that they're not planning to strike oil fields. I think that was his terms. Don't quote me on that, but I think about that, and that the cynic in me says, well, they're not planning it today. Who
Mhm.
knows what tomorrow will bring or next week will bring as this, I'm going to say, escalation continues, and until there's a little bit more of a solid path to peace. Uh, the bigger picture, also the macro news, those we continue to see the energy EAI and other various, let's say, analysts continue to sort of downgrade the expected usage due to electric cars and just economics. And so you've kind of got this tug of war between ideas of less usage and the explosiveness of the political environment. Um, and I'm using, this is my terms, I'm using, the world's on fire right now. I mean, there's just a lot going on. And in fact, talk today of potential troops from North Korea joining Russian troops against Ukraine. So things are ratcheting up, not down at the moment.
No, that's a very good point. Since that global volatility is definitely going to be with us for a while, it looks like. Let's go to livestock. Cattle mixed, hogs mixed Thursday. We got some cash cattle trade hogs. I was curious if we'd follow through after Wednesday's explosive session in futures, but all in all, just felt kind of mixed in the protein sector. Any big notes for us today?
Well, you can't really string two really big days together one way or the other. If you look at cattle, kind of tipped over, and then all of a sudden they seem very resilient right now. You've got a good jump in the choice cuts and in a select, but yet I think if you look at slaughter weights, they look heavy to me. And the market seems heavy to me in cattle. So I'm encouraging producers to defend that market with put options. Maybe leave this top side open, still supply sided bullish. I don't know when I will not be supply sided bullish. It may take several years, but uh, right now, suffice it to say, we're really encouraged with the way the cattle market's holding together as well as it is, when it seems like the kind of setup is there, if nothing else, for a correction. But the reason I'm recommending those put options, I just want to give some real perspective. For instance, on like the December cattle here, on the board, recently topping near 189, same basic level they were in midsummer and spring. But in summer, they went from 189 within a matter of weeks, dropped down to 173. So $16 sell off really fast. That's what we want to guard against. And that's why we're being defensive minded. You've got all this other economic data sort of floating around out there. Some economists look and say, hey, the economy is really kind of chugging along and avoid a recession. You've got low unemployment. You've got interest rates coming down. No, nothing to worry. Consumers will start, seeing the idea of spending more money, and then you see the other side of the coin going, no, no, you're not looking at this. Inflation's still there; it's still sticky. The consumers feel it in the retail sector and the supermarket, and I got to side with that group there. You go into a retail sector, go into any grocery store, box store, prices are high, and I don't see consumers shelling out money for that. So my point is the same point I've been making for some time. I don't think we're building any new demand channels. And so the channels we have, if they soften at all, the market's vulnerable to a break.
Brian, how about that dairy market? What are you watching over there this week?
Yeah, cheese and butter have had some really hard push downs, and kind of scratching my head on that because prices were low. We couldn't figure out why processors weren't grabbing it fast enough, and then they did. Then they really chased it hard and pushed it up, and then all of a sudden, here we go with tipping over again. So we're kind of wondering, gosh, are they on the sidelines, or they just kind of got booked what they want, and they're sort of avoid milk prices as an example on the December contract peaked over 22, and this isn't a huge sell up, but here recently we're now around 20. Well, here we are back to 21.49 today. And the recent high was just a little over 22.50. So they have come back nicely, not necessarily aligned with where cheese prices are. So that would tell me the market, the futures traders in the December milk are expecting upturn in cheese prices or in butter prices, heavy volume of butter traded, but not necessarily at higher prices. So yeah, a lot of volatility there. China has ample dairy supplies, so we don't look for that avenue to open up. So it kind of looks to me like the milk market probably peaks in the $20 to $22, $23 range at best, unless something comes along. And I don't know what that would be at this point because these prices are ultimately, I would be very surprised if we didn't see that we're, if not quickly, but slowly building the herd and building the pipeline for more supply.
Brian, as we close it out today, any final thoughts you would share or reiterate to folks this week?
I think I would just kind of keep in mind where big picture perspectives are. So if you're a feed buyer, second opportunity to step up and get some things bought at levels just 3-4 weeks ago you thought were maybe you missed. So I would look at that. I don't think the world's coming to an end, the grains. I know there's some analysts who are really bearish out there, but I think farmers kind of push their heels in pretty hard. They don't want to give it away or sell it cheap. But they'll be more aggressive selling on rallies because it's just the economic environment. Last year, farmers were looking for something a little better. It didn't come along, but they could rest a little bit on their economics conditions from the previous year, previous 2 years. That's not the case. So a little bit more aggressive on selling rallies. Look for opportunities. Talk to your buyers. Does the carry work for you? Does basis, try and negotiate basis contracts, or ask your elevator to call you if your basis tightens in. Just think of things to be creative that give you a competitive edge in a market right now where you've got tight margins and there's ample supplies.
Brian, if folks want to reach out to you there at Total Farm Marketing for a conversation, a few different ways I know to get a hold of you, how can they reach you?
I would ask first for a phone call at 800-334-9779. So we'll start with that. Or you would, I would ask that you as in the listener, send me a email, Brian with a Y, so BRYN at totalfarmmarketing.com.
Brian Doherty with Total Farm Marketing. Always good to talk with you, sir. Thanks so much. Have a great weekend.
Jesse, thank you, and keep up the good work.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.